Good morning, everybody. Good afternoon for some and good evening for some. So, well, welcome everybody to the Unicorn investor discussion. And we're very proud as Wele to be facilitating this entire event. I think it's been very well attended and very, very interesting. And also just to point out that our attendees are joining us on 3 platforms: Goldcast, which is the excellent platform that we're using today, LinkedIn live stream, and also on YouTube. So to everybody out there, you're very welcome. By way of introduction, I'm Leonard Donnelly. I'm the CEO of Wele. And I have a distinguished panel of guest speakers today, and panelists at Unicorn. And what we're going to do is we have 3 questions. We may add a 4th or a 5th. So we'll structure the session in 4 pieces, the 3 questions and the Q&A around that. And then at the end, please take the time to ask us any question. It doesn't matter how mad it is. We'll entertain it and try and give you as reasoned an answer as we possibly can. So, without further ado, I'd like to have the panelists introduce themselves. Perhaps starting with Andy Boyd from Bramley Partners.
Thanks, Leonard. Hi, everyone. Andy Boyd from Bramley Partners. I'm the founder of a relatively new venture firm based out of Boston. Started it actually a month before COVID hit, so that was terrible timing on my behalf. Prior to that, I started and ran the private investing team at Fidelity Investments out of Boston. So lots of experience investing in venture and growth. Lots of unicorns, lots of sectors, and pretty much all geographies too. So happy to be here.
Thank you, Andy. And perhaps Gwen?
Yeah, of course. Hi, everyone. It's nice to meet you. My name is Gwen Umbach, and I am an investor at Salesforce Ventures, which is Salesforce's corporate venture capital arm, focusing mostly on B2B software in and around the Salesforce ecosystem. We've been around for about 15 years. I joined the team a few years ago, and prior to this, I was at Goldman Sachs on their TMT team, focusing on high-growth enterprise software companies. Excited to be here.
Great, thank you, Gwen. Gwen, perhaps you could turn your volume slightly up. It's a little bit on the low side. Abby.
Hi all, I'm Abby. I'm an investor at Radian Capital. Radian Capital is a 4-year-old growth equity fund based in New York City, although I'm calling in from lovely, foggy Half Moon Bay, California today. Radian is focused on enterprise B2B technology investing, so similar to what Gwen does, but a firm, not a company. So excited to be here. We do a lot in terms of digital transformation, and I'm excited to kind of connect with you all and talk about low code, no code. Prior to Radian, I was an investment banking analyst at Growth Point Technology Partners, a boutique investment bank focused only on technology M&A. So I spent my whole career in technology and excited to be here. Thanks for having me.
Thanks, Abby. And just thinking about Half Moon Bay, I remember swimming there and thinking to myself, this is as cold as Ireland, if not colder. But beautiful. Beautiful.
Can confirm.
Axel.
Hi, this is Axel Krieger. I'm one of the founders of Digital Plus Partners. We are a B2B growth equity fund based in Munich. We invest into usually industrial tech companies out of the European ecosystem and then help them scale globally, in particular to the US. So we made 17 investments to date, invested something like $400 million US. And out of our 17 investments, 15 are successful in the US, which has always been our goal, obviously. Before that, I was with McKinsey for 16 years, ran automotive industry for McKinsey in China. Before that, for the Northeast of the US. And I've basically always worked there at the interface between classical industries and software disruption.
Okay, fantastic. Fantastic. Well, you're all very welcome. I hope that this will be the first of many events over the years. Waylay, the company that's powering Unicom, has gone out of its way to not make it a Waylay event. And I don't know if you had a chance to join any of the panels earlier, but that was very evident. That it was a very, very open discussion. A free forum for everybody to ask questions. So again, for everybody out there, please keep your questions coming in. So the first question is, will unicorn investing in Europe outstrip the USA in the next 5 years? And if so, why? So without further ado, who would like to put up their hand to try and get into the subject first? Right, I'm going to nominate Andy.
It's okay. Maybe I'll be the contrarian. I'll say no. I think definitely Europe can come up, but and the U.S. can come down a little bit. But there's just so much activity in the U.S. and really there's this fundamental framework that has been around for a few decades now. I mean, you can go back to Silicon Valley, more than just a few decades. But it has really been augmented in various places, and you're not just seeing opportunities come out of San Francisco or the Bay Area. I mean, we see great opportunities, obviously, in New York, but we're finding great companies in Austin. We've seen some out of Chicago, obviously a ton out of LA, out of Seattle. We've had great opportunities out of places like Detroit, out of Buffalo. Out of Charlotte, I can go on and on and on. And so I think that mindset has spread beyond the Bay Area. You could also say valuations are getting a little crazy in some areas, but then I look to Europe, and we've had some great successes out of Europe. We were an early investor in Spotify, and we had a number of others. But it seems like it's hard to get a company off the ground in Europe, like that first stage of the rocket. But once it's of scale, then you can kind of come in. But like, I'm an investor in a German company, and there's a little bit of a dispute, and it's awful to resolve a dispute. Whereas in a U.S. company, the board votes and that's it. It's move on. There's nothing that anyone can do, nothing that a shareholder can do, nothing that anyone else can do. The vote is had and we move on. Whereas in this particular company, it's just, shareholders vote, and then they threaten, and then they want to do, you have to have unanimous. And so one person has a veto, and it's just a little messy. So I could go on and on about other things. I'll let some of the other folks talk a little bit, but I think it's that framework that stock option plans, they need to be worked out better in Europe. The ability to hire and fire employees very, very quickly needs to be worked out. So without those fundamental changes, I don't see Europe outstripping the US. Although I definitely think it's going to grow, and we're seeing more and more opportunities in Europe.
Would you be of the opinion that there are pockets in Europe where, let's say, for example, employment law, is kind of much more flexible? There's maybe more experience in an entrepreneurial sense. I mean, coming from Ireland, and I'm a tech entrepreneur by background. I think, and we learned an awful lot from the States. We spent an awful lot of time in the States, and I would imagine that in Ireland and Germany and maybe the Netherlands, and Belgium as well, early days, but that culture is beginning to build.
Yeah, I would say, I mean, Axel will know more because he's on the ground, but from a I'm going to say generalist, dumb, non-European investor, when I just look at it, I see movement in Ireland, but I just see a lot of wood still to be chopped in a lot of other places. We looked at an opportunity in Italy, and it's just very, very, very difficult. It's difficult to get new things started. It's difficult to move assets around. So I would say that's probably more at the bottom end. And my experience in Germany has not been great. Again, from that startup phase, once a company reaches like 50, 60 million in revenue, it's a different story. but it's how do you get to that liftoff? How do you get to that scale? That has been the difficulty for us. The early stage is just really difficult in Europe. I don't know if you include the UK in Europe, but obviously the UK has done well. I think Ireland has done well. Germany's probably better. I've heard we haven't done anything in France because we just have never really, again, found the company that we thought could really accelerate. And the expectations of growth these days are far greater than they were 20, 30 years ago. 20, 30 years ago, if you did 30% growth, people really, oh, that's pretty good. Now we don't even look at a company. Literally, we don't look at a company that is not growing at least 50%. And all of our portfolio companies, all of them are growing over 100% a year. Wow. So it's just like, there's just too many other places to look. And so how do you get that supercharged? You hear the word hyper growth all the time. That's kind of, it's easier to grow now than it was 20 years ago. So you have to grow to make yourself a viable, attractive investment opportunity on a relative basis to all the other companies that are out there. So anyway, I'm taking up too much time.
Yeah. So I think we'll, in any particular order, but I think Axel, I think the gauntlet was kind of thrown down there a little bit.
So, well, actually, in general, I agree, Andrew, that the European ecosystem is not at the level the US ecosystem is or China. But that's less the point for an investor, right? Because for us, it is also the opportunity in Europe is still good if you focus on the right kind of verticals where you can credibly scale companies out of that ecosystem. So like anything which is related to machinery, automotive, and the likes. Yeah, that's where we focused on. And at the same time, it's very immature when it comes to growth equity, right? I mean, what growth equity players do you have in Europe? Barely any. And at the same time, you need boots on the ground in order to work in such more immature environments. And I agree with you, German teams are just not that well experienced on those topics. And so I think the opportunity is huge, but at the same time, clearly Europe will not overtake. And I don't see any reason why. So for us, that's why I said in the beginning, for us, it's very much about scaling the companies to the US. Because if you think about then getting them ready for exit, they should be in the US. And that only works, I think, if you are credible. And credible means you have to be in areas where countries like Germany still have globally best ecosystem, which is around automotive machinery and the likes. I would not invest into any B2C startups out of Europe, to be fair, me personally. But I mean, clearly there are also good examples like Spotify and the likes, but that's how I think about it. But very clearly, it's not about Europe against Silicon Valley. It is how can you be complementary and actually leverage Silicon Valley in growth or leverage the US in general in growth.
Yeah.
That's our approach.
So Gwendolyn, what's been your experience?
Yeah, so we have a team, and I don't focus on our European investments, but we have a team that's sitting in the UK, kind of boots on the ground, as Axel said. And I think what's key about focusing on companies in Europe is, finding the niche markets that are growing as quickly as possible, right? And so when you think about kind of where you want to be focusing, and one of our investments is in a company called Hopin, right? And it's one of the fastest growing companies that I've ever seen in our portfolio for the stage that it's at. And it's just kind of like it was riding the tails of COVID and kind of, digital transformation. And given that there weren't any in-person events that were possible, over the past year. And so I think that, similar to how you would look at investments in the US, it's, in the UK, it's really finding those markets that are growing just as quickly all over the world, and where they can also leverage, clients and customers in the US as well as quickly as possible. And so I think that, if you think about kind of the pace of investments in the US and kind of, the velocity that Silicon Valley has at the moment, it's kind of a market that none of us are used to over the past few years. And so I still think Europe has a lot of catching up to do in that regard. And I think that because of the pace, there will be, you know, quite a few down rounds over the next, you know, 3 to 5 years because of how highly valued these companies are at the moment. And so I don't know if Europe is going to be able to catch up anytime soon, but I think that they do have a lot of velocity, I think, especially in the UK, where our team is focusing on investing. And as long as you can, you know, find the right companies in the right markets that are growing just as quickly as you want them to be, then it can be a really compelling place to spend time.
Very good, very good. Abby, my sense of Radian is that you're now really studying Europe very, very seriously. You know, as a fund, and I think you're really working hard to find those opportunities for Radian in Europe. Is that correct?
Yeah, that's correct. So Radian has a little bit of a different model. Our primary focus is finding companies that are operating capital efficiently. So we won't invest in a company if they've already raised 15 million. Oftentimes we're the first institutional investor that they've had, and we have a really high concentration, high conviction portfolio. So we only invest in 10 to 12 companies per year, which is a little bit different than the venture model. So for us, outpace is really hard to predict. I don't know if unicorn investing will outpace the US and Europe, but we at Radian are focusing on opportunities in Europe because they've traditionally had less access to capital. You know, it used to be that if you wanted to raise money, you went to the kids in the backyard. Really helpful in Silicon Valley when you live next to Kleiner Perkins and you know, Google Ventures. But not so helpful when you're in Europe and there's less access to capital. So we've kind of found that at Radian, a lot of the opportunities in the US have kind of already been overfunded for our model and how we invest. So we actually have someone this summer who's spending her entire summer in Europe just focusing on European companies. And what she's bringing to the table is absolutely incredible in terms of the growth profile that we look for, which is pretty much founder funded, primarily bootstrapped, growing 100% year over year, super rapidly, have found great product market fit. You know, they're dipping their toes into the US, haven't quite done so yet. And then we have an operating team that can kind of help them scale into the US and grow their go-to-market operations there. So we might be focusing on a little bit of different companies. You know, our first unicorn in our portfolio was a company based out of Argentina originally, then grew into San Francisco. They're now based in San Francisco. So in our experience, we've actually found that you can find those hidden gems in Europe that have been growing super capitally efficiently and kind of can become the next big players. I don't know if we're not necessarily funding unicorns. Our valuations model is a little bit different than the venture capital valuations model. You know, we like to see revenues. We like to see that, you know, you're profitable or can at least reach profitability before we invest. But that's kind of how we're thinking about investing in Europe at Radian. And it's definitely a huge trajectory of growth for our firm.
Super. So I think we can conclude that that I know for a fact there are, you know, quite a few companies that are hitting those kind of unicorn valuations in Europe. They're again, it's a brutal business though as well, because you know, for every wannabe you know, a company in that space, it's a brutal reality for investors, and the attrition rate is very high. You know, so even with money, you know, it doesn't necessarily guarantee you, you know, a path, you know, to predictable success. So I think we'll conclude that discussion, and again, we'll have questions, I would imagine, coming in towards the back end of the discussion. So we're moving to the next related kind of topic, and you know, we can be a bit looser on this one, but it's about, you know, the question is how does a company with close to zero revenues, and this plays into your last point, Abby, achieve a unicorn-like valuation, and what formulas apply? Now, it's a tricky question, and we can kind of expand it a bit to be a little bit looser about the definition around unicorns, but Andy, we're going to plunge you into that one again.
Okay, lucky me, I get to go first again. I think it's very hard. And I you know, the only way you do that, the only way you have that kind of situation that I've come across, I mean, I don't know, we did almost 600 investments. So there's probably an exception to this that I can't remember, but it's really hard tech. That's the only way you get there. So think about a biotech where you can present a path to investors that has milestones that are generally accepted in the marketplace, and there can be value attributable to each one. And you are, let's just say, you are a biotech and your preclinical data is incredible, you know, people, and then that people can kind of look out to see what you're likely, how many programs you're likely to have in the clinic, what the success of those will be, and they can kind of work back to say, yeah, you're probably worth more than $1 billion right now. But on like a B2B or a B2C company, yeah, I mean, you need revenue. If you're building a nuclear power plant, and again, there's certain things that you are doing along the way, and I can ascribe value to them, then maybe you can get to $1 billion. So from my perspective, you'd have to be in hard tech, and you'd have to have be in a space where there's these milestones where you can show me independent analysis that you're on a path to doing something that no one else has ever done. But yeah, like in normal B2B, B2C software, I don't see how you're getting $1 billion valuation with no revenue. So,
yeah. So switching to Gwen, what's your perspective?
Yeah, this is a tough one. I mean, there's certainly companies out there that have been able to kind of get that valuation. I actually think that in a lot of situations, it's actually a disservice to the founder to be valued so highly before they have any sort of, you know, even like a proof of concept of their idea, just based on them having the pressure of growing into that valuation, likely at a very quickly rate. And so I think there are a lot of scenarios in which this actually isn't something that's sought after from a founder perspective, and isn't smart for them to seek, even though, you know, the headlines are great and TechCrunch will, you know, publish an article on you. I actually think it creates an even more difficult job when you have that pressure from the outside looking in for the founder. You know, that being said, you know, some founders, I think, especially if you're looking at kind of the founder profile, founders who are 5 or 6 time entrepreneurs, they founded a lot of companies that have done really well. Obviously, I think that, you know, a lot of VCs and investors are chomping at the bit to kind of get a piece of their company. And obviously that can drive up valuations if they kind of, you know, have been able to prove that they've been able to do this before. I also think that, you know, companies that don't have any revenue yet, I think that for a founding team, their ability to recruit and build out the right team is incredibly important. And that kind of ties into them being able to sell the vision of whatever they're doing, regardless of how big or small that vision is. And so I think that's, you know, obviously having the right team for an early stage company that doesn't have any revenue is incredibly important. And I also think, you know, something that I focus on, you know, specifically in the type of investing that I'm doing is that whatever problem they are solving, it's a growing market. It's not a stagnant market. I think that if you look at kind of, you know, TAM and opportunity, if the tailwinds are there, there's always more upside and opportunity in B2B software than we could have ever imagined. If you look at Salesforce's S1 when they went public, you know, quite a few years ago, I think that they estimated their TAM to be 500 million. And so it's like, I think that in the software markets, there's a huge amount of opportunity as long as, you know, you're solving a problem in a market that's, you know, growing very quickly. So even though personally, from my perspective, this isn't, you know, a company that I would go after if they don't have any revenue and they're valued at $1 billion, you know, prior to having any sort of POC, I feel like those are probably the key things that I would look for.
Okay, so it kind of reminds me of just about, and it's the journey of most companies, is that even, let's say, Tom Siebel, you know, Siebel Systems, a very successful entrepreneur, and, you know, he started C3 AI, and, if you actually look at that, that journey of that company, he had a bumpy 6 or 7 years really before maybe the company was too early, intercepted the market eventually, and then investors, I think, began to kind of grow a bit of faith in the momentum that he was building. But even for a titan, from a 15, 20 years ago, perspective, even somebody like that, I think can actually, the journey can be quite long to actually get going. So maybe Abby, you could pick up on that maybe from that perspective. And the reason I say that is it's not to kind of burst bubbles or anything like that, but it is hard. It's kind of not lucky strike territory, and there are reasons why certain companies succeed.
Yeah, I don't want to sound like a broken record here, but I'm with Andrew and Gwen on this one. It's really hard to invest in a company that doesn't have revenues at a $1 billion valuation, even if you're, a rock star founder who's founded 3 different companies. It's really, really easy to fundraise and invest around a story. However, most investors won't seriously take a look at a company unless they've seen some sort of traction that you've had in the past. So for us at Radian, we like to say that we're not really good at getting the car out of the garage. We're really good at helping you step on the gas. There are some investors who are really good at kind of helping you build the car in the garage, get it going, get everything all organized. And sometimes those investors look at what you're building, and as Gwen said, they see the tailwinds in the market and they say, look, this is $1 billion car. We'll step on the gas later. There are situations where that happens. It's not something that Radian really plays in, but sometimes it happens. And as Gwen said, it really kind of comes down to what's the market doing? Are there massive tailwinds? And kind of what is the founding team? Are they a bunch of rock stars who've done this before that you can really put faith in? That's kind of how those companies get those $1 billion valuations, to my knowledge. Alex Ellis kind of touched upon this in an earlier session when he was talking about open source projects and kind of their sponsorship from organizations. And he said, projects can't survive with just sponsorship. This idea kind of translates into companies and investing. The idea has to be there and there has to be product market fit for this to work. You can't just keep on pouring money into something that doesn't have both of those things. So that's kind of what's important for me when I look at companies that achieve $1 billion valuation. They have to have that product market fit and be growing like a weed on their own, because otherwise, does the market really need what you're building? So those are things that I look at when I kind of am evaluating these unicorns. Additionally, when you think about companies and their valuations just in general, kind of moving away from unicorns, kind of what I like to think about is what types of business models will be successful? And kind of at Radian, what we love is product-led growth. Is the product taking off kind of within the organization? It starts off on one team using it, and then all of a sudden the COO is saying, hey, what the heck is that? I need that in my group too. And then you're signing a multi-million-dollar enterprise contract. Something that Whaley is doing is focusing on that product-led growth. And we think that's kind of the best way to really have a product catch fire within an organization. So derailed us a bit from the unicorn talk, but those are kind of my thoughts on this question.
Well, I'm delighted that you're making some positive comments about Whaley in that regard, Yushin. So thank you very much. It's an interesting one, though. Axel, you can take a brand new perspective here, but I think even with getting the company out of the garage kind of scenario, and even if you get an amazing valuation, the conditions that come with that are pretty horrific. You know what I mean? I would imagine. You know what I mean? In terms of the downstream impact of not being successful. Maybe Axel, you could pick up here.
Yeah, so actually we invest very similar to what Abby is doing, and even at a later point in time, and we define maturity of a company also by the revenues they make. So for us, it's also, we usually invest when they are at least 500K monthly recurring, something like that. So it's also difficult for me to say. Yeah, we like a strong IP. We like we invest into a couple of tech nerds sitting in a basement, but who sell their product already to Google, yeah, without a sales guy. We like that, and we can indeed help them then scale. But we are also not the kind of guys who find that team that will most likely build a unicorn without any sales at all. So same here, unfortunately. But by the way, this is also more, I guess this is more the European profile that works. It's not this superstar experienced team that has done it a couple of times. And also, when you look into Tom Siebel, and you mentioned C3 AI, I mean, to be fair, people invested into C3 AI because of Tom Siebel, not because of C3 AI. Yeah? I mean, C3 AI back, I think C3 Energy, then C3 IoT, and now C3 AI. It took them forever, yeah. And I mean, what they're doing is not super unique. Yeah, it's a good company. It's a good company because Tom Siebel is there and they hired good people. But it's about experience, and at least for Europe, you don't have that so much. You don't have those serial entrepreneurs so much.
Very good. Yeah, I mean, I think that is true, and I think that there are talent pockets. You know, it's unfair to say, you know, to homogenize Europe. I think that there are great entrepreneurs in different places, but maybe the gross critical mass is not there yet. I think that would be fair, but the ambition absolutely is. And I find it very interesting because most of my tech working life and doing advisory work has been North America and laterally China, but actually very little in Europe, interestingly enough, and that's over what, 7 years. But I'm actually definitely beginning to see the kind of the right sort of companies, the right sort of teams. You know, they carry enough experience. They have more confidence, and the leadership capabilities. I think I mentioned my dissertation in Trinity was about, success failure based around the personality of the CEO, and I think that those leaders and kind of that kind of quasi promoter piece as well is beginning to come through in the personalities of these, of European tech companies, which is really, really important. We might park this one there because it's a notoriously difficult one to draw any conclusion on. But I think the wisdom that the four of you has shown is very evident that it's not easy, it's very rare, and it's improbable in many instances. So the last question, it's kind of very pandemic relevant in the sense that digital transformation is buzzword that is being bandied around on a regular basis, but really what it means, I think, when you strip it down, is actually about the role of automation. And it was an interesting comment from your partner, Axel, Thomas Jetter, that I think he said within 30 years, there's going to be a shortage of about 51 million people in Europe to do certain tasks. So it raises the question, and it's a question I think you can take all over the world. And I know we do have a question from a guy in Asia, on this subject as well. But the role of automation, I think is going to be a very big theme going forward. Pandemic has kind of exposed all that. And I think particularly in the B2B market, I think it's where you see the most innovation today. So I'd like to maybe, Axel, I think Germany is a leader in this domain, so very much like Axel to lead us off here.
Yeah, sure. I can try. I mean, automation is a huge topic just by definition for the German market, at least. I mean, we have a shortage of workforce, so we have to automate more. Plus, Germany has traditionally been very strong in manufacturing, and also when you think about exporting of products. So yes, there's a huge push, and that's what I meant at the beginning. You have to be, so if you invest into companies in Europe and want to build unicorns out of Europe, you have to do that in an area where it's credible. And here we are, right? Automation, in general, when you take the broader topic of automation, including the industrial IoT, obviously, you can also link this to the adjacent topics like enabling technologies for autonomous driving, stuff like that. I mean, yes, this is a huge topic, a huge area where Europe is very credible in. Where you have the original leaders in those areas come out of Europe. And I would guess you also have better talent than most other regions in this area, so you have the right kind of ecosystem. And also when you look into the investments of US tech companies in Europe, like Google investing in Europe, they further invest in Munich, for example, in that space. The Google industrial cloud team and also the automotive cloud team are based out of Munich, the global headquarters. IBM's industrial IoT team is based in Munich. So huge topic. US tech understands that as well. And so we link back to Europe, and Europe is probably the better starting point for this.
Mm-hmm. Yeah. Well, I would agree. I think there are other parts of the world. I think that in Asia, obviously China is incredibly advanced here as well. But I, based on what I can see, I think I would absolutely agree with you. Gwen, I think this is kind of an interesting one for you because Salesforce, I would imagine, with things like Einstein and Service Cloud and Field Service Lightning, things like that, it's kind of understanding this space a lot better. And I can see even in the earnings call transcripts, that digital transformation is very important. Internet of Things is a theme, AI. So Salesforce seems to be moving in this direction.
Yeah, definitely. So I think that one of the reasons why I like enterprise software investing so much is because a lot of it is around how do you make the enterprise, these large organizations with over 10,000 employees, more efficient and effective, right? And I think that in any large organization, and Salesforce is over, I think, 30,000 employees at this point. Correct me if I'm wrong there, but you have a lot of people who are doing really monotonous tasks, right? And so things that are very repeatable, things that you could likely automate, right, if you had the right software and the right technology. And so it's certainly something that Salesforce is focusing on, because at the end of the day, you want the people that you hire and all of your human capital investments to be the most efficient and effective. And if you are hiring people and paying them to do tasks that could be done by any sort of software that's written the right way, then of course we'd rather invest in that and free up the time for people who can work on more interesting projects. And so I think a lot of how Salesforce, and I'm a little bit detached from the larger entity, given I sit in an entirely separate arm, but I think how they're thinking about it is what are the investments that we can make and the partnerships that we can look to in order to free up those, especially engineering resources. You see kind of this, there's so much money going into all these engineering tools right now, and this like no code, low code automation movement, so that you can have people freed up to do what they want to be focusing on. And so we've made some investments in robotics process automation, and obviously UiPath is one of the most highly valued companies in B2B software right now. I think it's trading at 36 times forward revenue. And so this is something that the entire world, all the public markets investors are also highly focused on, and think that it's going to be continue to grow into something that's even larger than it is today. So yeah, it's something that I think we talk about a lot in terms of kind of thinking about AI, and obviously Einstein Analytics is a big part of that. And I worked on our investment in Snowflake, right? And even though that isn't directly tied to automation and kind of the workflow piece of it, it's certainly a part of digital transformation for companies, right? In terms of,
it's interesting. It's interesting, Gwen, that that actually one of the mutual opportunities with the Waylay Salesforce Digital Twin, which is an automation solution, that I was staggered with one of the early potential customers that the OPEX savings or the operational savings per annum are in a range of anything from $100 to $500 million to the end customer. So I mean that's massive. So the disruption of automation technologies is really, really deep and powerful, and I think that's not a point to make. And nice to note also that UiPath is a company that came out of Europe, so in the year,
I thought you'd like that.
Andy, I know we're going to be running a little bit time just to make sure that we squeeze in some questions. So, Andy, what's your perspective?
Yeah, I don't know about driving most, but we like this space. Digital transformation automation is one of our key areas. I mean, when people ask me about it, I say we like to invest in companies that are putting people out of work. Sounds awful, but that's how we get productivity. And we think there's tools now that are at a stage, yeah, they've existed, machine learning, AI has existed for a while, but they're kind of now figuring out the applications, and it's great productivity. So we really like it. We spend most of our time in that space.
Excellent. And Abby, final perspective from you.
Yeah, just to kind of round it out here, I think we've talked about just the massive tailwinds and digital transformation and automation. But something that we haven't talked about yet is what digital transformation means and how broad that term is. Andy says that he investing in companies that put people out of work is so true. That's kind of what we do at Radian too. But at the same time, I think that there's room in that digital transformation for tools that bring something that's in the physical world into the digital world. And it can be something as simple as bringing a physical whiteboard into a digital whiteboard. One of our first unicorn that we invested in from our first fund was Mural. And Mural brings digital whiteboarding into the virtual world. And that's digital transformation doesn't have to be, a super complicated product just for engineering teams. It's kind of seeping into everyday users' lives too. And there's a lot of opportunity for just the most basic things to be digitally transformed. And I'm really excited to see kind of what entrepreneurs and future tech innovators come up with. I mean, I wish I had thought of bringing a physical whiteboard into the digital world in 2020, and there's just so much left out there for us to digitally transform, whether it's hard tech or something as simple as a whiteboard.
Yeah, it's and just maybe just to close this piece of the conversation, I think that the fact that everything is low and no code based, it certainly is with Waylay. Very advanced. User experience is amazing. Little plug from Leonard, but it really does change things. We have critical skill shortages with data scientists, and now with these low and no code approach, the operations teams, anybody with an average IQ, can build an application themselves. They don't have to kind of send their requirements to the data science group and wait and see something come back 2 years later and it doesn't work. They can actually build based on their own domain knowledge today, which I think is amazing. I think Callum, I'm hoping, is going to step in with a collection of questions from the audience. Are you there, Callum? We'll go give him a.
I'm here. Here.
There you are.
Yeah. So we just have a question from Kishore here. So he's curious to hear about thoughts on Asia, the Asian market, and do the economics allow for growth capital? Any B2B companies that you're excited about? That question was sent in a little while ago, but that's one of the questions. Yeah.
I think Abby, we're gonna focus Radian on this.
You kind of picked the wrong gal, I'm not gonna lie. We haven't done much in Asia, although recently we recently invested in a company that does basically it's a design automation platform for the apparel industry. And so I think that when it comes to Asia, we're looking at companies that have sort of the geography, informs what they do. So this company is based in Singapore, and they're super close to a lot of the apparel industry in Asia and all of the factories that are there. So when it comes to Asian companies in Asia, that's kind of what we're looking for. Do you have a reason to be in Asia? Because if not, it's kind of hard for us to get there, although the pandemic has made that a lot easier. But that's kind of our only investment in Asia to date. I know that there's a lot going on in that ecosystem. I'm not very close to it, so if someone else is close to it, by all means, fellow panelists, jump in. But we're excited about what's happening in the Asian market.
Yeah, maybe I could comment because I've spent so much time in that part of the world. I think China has been an exceptional innovator, for the last decade. But I think with the geopolitical adjustments that are occurring, I think that there is an incredible amount of innovation occurring elsewhere in Asia, and even places like the Philippines, obviously Indonesia, Malaysia, Vietnam, and I think these countries are going to be the up and coming powerhouse to kind of to kind of where these highly innovative even unicorn like companies actually come from. I mean, Andy, would you have a perspective on this? Maybe reaching back into Fidelity.
Yeah. So my current firm, we really focus on North America, but yeah, back at what we were doing at Fidelity, we invested in all sectors, all geographies. There's definitely the foundation for attractive investments in Asia. China is the obvious one. I'd almost even say that's a separate market, but other parts of Asia, we saw great opportunities. We were always looking for companies that weren't just regional powerhouses, but could become global players. I mean, that's really all we were looking for. And that kind of goes hand in hand with being a unicorn. But we saw lots of opportunities in Korea, Indonesia. So yeah, I definitely think that there's a lot of opportunities. It's a good foundation for it. The flip side of the coin for us, the downside is that, as Axel said, you kind of need boots on the ground in Europe. I think it's even more true in Asia. If you're trying to do Asia from the US, you're going to get things that everyone else, what you see and think of as exciting. That's because, you just don't know that 50 people or 100 people have already passed on it. And they know where all the skeletons are. And you're at a real disadvantage if you don't have people on the ground who are watching these companies as they grow up. It's just too big of an area.
Yeah.
Those are my.
I was just thinking, maybe I'll just get your perspective quickly. I mean, I've spent a fair bit of time in India, and I was chairman of a company there, for a very short period of time, actually, because for that very reason, I thought it was kind of never going to work. Not being a non-Indian, you're not understanding it's a very complex culture, very complex market. And I'd just be curious about your views. And I know there are a lot of people from India that have are with us here today. So it just would be maybe interesting, Andy, to get your view quickly on India.
Yeah, I don't think we ever did anything out of India. I think it's even similar comment. I think you have to have boots on the ground. Mm-hmm. And if you don't, I just feel like you're looking at whatever everyone else has passed on. You're not going to get the best opportunities. They're going to be snapped up by the people that are on the ground there. They're going to be snapped up very, very quickly because there isn't a plethora of opportunities all over the place like there is in the US and it's easy to travel around and in Europe and frankly in China. So I think that's just harder to do.
Axel, we'll give you the last word on this question.
Yeah, well, I lived in China for 4 years. After 4 years, I had understood that I haven't understood anything. By the way, that's already quite a step further than many of the investors in China. But that's why we would not invest in Asia without a local team. I mean, just like Andy said, I totally believe in the opportunity there and in the power of the companies there. I mean, it's an amazing market and amazing teams, but it's just different. Mm-hmm. And so I would not invest there. Also, when I think about the scale-up story of our companies, it's first to the US, also not within Europe, right? We go from Germany to the US, and then we might go from the US to China. Mm-hmm. But we would never do it the other way around.
Interesting. Callum, and maybe Gwen, we'll maybe, sorry, I think this probably will be our last question just for time. What further question would you like to ask, Alan, on behalf of somebody?
On behalf, okay, so I'm just conscious of time, so how people have schedules and things like that. But as this goes back to the unicorn discussions, so this is from David. So as you talk about these unicorns, you allude to or directly talked about the vision that leadership has for the future of the company. If you had to pick one aspect of that vision that is important to you, what would that be? So I guess that's an interesting one, kind of as a good closer as well, you know? Yeah.
So Gwen.
Wow, that's a stinger.
That's a tough question, in fairness.
Yeah. I think that in the context of it being a unicorn type valued company, and this might sound cliche, but I think the most important thing for me would be that the vision is category defining, especially if it's an early stage company. And what I mean by that is that it's not, I mean, you can certainly build large companies off of, problems that have been solved in the wrong way, or, companies that have failed trying to do it, things like that. But I think that founders with a vision, and, even if it doesn't pan out, founders with a vision that, the world can be changed for the better in a certain way. And that they're defining a category in the company that they're building, I think that can be very, very compelling. And, you have to have really big balls to be a founder, right? And be an entrepreneur, and, being able to kind of sell your vision that, you're going to create and define a new category yourself is really exciting. So that's certainly something that, gets me pumped up when, I'm hearing pitches.
It's interesting that before we were talking backstage, we were talking about an alternative question, which was all about founders and leaders, and lessons learned, good or bad, in failure situations and in success situations. And by the way, we all know that failure is very complex. Is not necessarily the embodiment of the founder that's the problem. It can sometimes be the investors, or it can be sometimes something, in the geopolitically has happened in the world. And so there's a sort of force majeure. But it would be really interesting to maybe move the needle and see what the experience has been from different perspectives. Maybe perhaps Andy, starting with you again.
Sure. I mean, so you can sometimes bucket investors into two camps. You bet on the jockey or you bet on the horse. I don't think it's ever that simple, but if you throw me into a bucket, I'm in the horse bucket, I guess. I bet on the horse. I don't really like betting on the jockey, but if I look back over the times when we've done well, when the horse hasn't been so good, but the jockey has kind of saved the day, there's really one attribute that stands out, and that's storytelling. That they can craft a narrative that just, I call it, sprinkling pixie dust over people. And they just walk in a room, and the next thing you know, they just trigger that hand to wallet reflex. And the next thing you know, people want to write a check. And they spend less time on the diligence and more time understanding this vision. But it's really the founder's ability to craft an enticing narrative that, hey, if I'm successful, look at what this could potentially be. And not everyone can. It's a very, very, very hard skill to acquire. But they have, founders that have that skill have bailed us out a few times, and I've been utterly shocked, that this company should go bankrupt, and he's able to sell it for a profit. And I have numerous examples of that. So it's really, it's telling a story, and storytelling, I think, is more important than it was 20, 30, 40 years ago. It used to be you would look at how many patents someone had, and you'd value X number of patents times Y million dollars equals, the value, or X number of engineers times Y million dollars per engineer equals the value. And now it's much more fluid, and it's kind of what Gwendolyn was saying is this ability to tell this story. It's storytelling. That's yeah.
Axel, what would be your experiences?
Well, I agree. I also like people who tell good stories. The problem is you don't find many in Europe. So for us, it's very much about old school, making sure we invest into really cool technology and that we have those tech nerds I referred to before, which know what they're doing and who are the best globally in this particular field. And then it's about making sure that those people are open to adding on people that helps them to get a commercial mindset as well. And that is not so easy because and we are super transparent with them before we invest, and we align with them before we invest that those commercial people will be added on, because otherwise they don't see the value of commercial people, salespeople. They don't understand that. So it is important to have a strong IP people, I think, and then making sure that they are open to add in further people.
Yeah, absolutely. And last word, Abby. I think Callum is trying to wrap us up.
Yeah, I'll make this quick. The most important thing I look for when a founder is pitching me is, are you solving a problem? There's a lot of really cool technology out there. I think VR is the first one that comes to mind. Prior to the pandemic, VR is pretty cool technology, built by some pretty smart people. Did the world need it? Questionable. So when I'm listening to a pitch and listening to a founder tell me about something, I think, does this really solve a problem? And I think to one of our companies called Boast in our portfolio, and Boast does R&D tax credit automation. Filing R&D tax credits is terrible. It's a terrible process built by terrible bureaucratic people. And Boast.ai simplifies it. That's really problem solving, and that's why we invested in Boast. They're not a unicorn at the moment, but they solve a real problem for companies. So that's kind of, if you're a founder looking to pitch, I think double clicking on that problem that you're solving and really selling how you make people's lives easier. That's kind of how you get a product that's really sticky in an organization, whether they're SMBs or enterprises. That's what I look for. Super.
Okay, well, listen, first of all, I want to thank you all so much for taking the time. I know you're incredibly busy. I'm in different parts of the world, different time zones. Poor Abby, we got you out of bed very early yesterday. Really sorry about that. But I really couldn't thank you enough, and also to all our speakers before us, for all the different sessions, and most importantly, I guess, for all the people that are attending. And I hope this was an enjoyable, entertaining, and useful experience at Unicon. We've tried to make it everything, not waylay. It's kind of your event. Automation is important. We're a constituent part. We'd like to think of that bigger thing happening. But we were just delighted to have the opportunity to set up this event, get the conversation going, and hopefully it won't be the last one. Callum, over to you to close.
Okay, yeah, thanks very much. First of all, yes, thank you very much to all of our speakers today. I must say, excuse me, a frog in my throat there. Perfect timing. Just wanted to say, yeah, that really, really enjoyed this panel discussion. It's absolutely fascinating. As someone who's gone and started a company before and not seen it exactly succeed, it's great to hear about all of the insights and the resilience that you need to have to be a founder and have the balls to go do it. So, I mean, being an entrepreneur, I think, is really, really, it's pivotal for the future. I think more people should consider it. And I think that's the great thing about this event that we put on today. There's been such a mix of people. There's been aspiring entrepreneurs. There's been established entrepreneurs. There's been VPs. There's everyone, and there's bringing together of people. And I think that I hope people went out there and networked today and really, really made the most of it. So yeah, I'd really like to just also say a huge thank you to all of the speakers once again, and also to the Waylay team, Veslin, Sander, Orestes, Boric, Leonard himself, and everyone else that has basically contributed to the event. So overall, a fantastic day, and I hope that we can do more events in the future.
Great, and at a personal level, thank you, Callum, because Callum is the one that is carrying the can on executing this event here, and it's kind of been a very strange 12 months here, at least here, and doing something like this is kind of non-trivial. So thank you very much as well.
Cool.
So with that, we'll all say goodbye.
Yeah, and as you know, the switch buttons down the bottom to go back to the backstage. All right, well, thanks everyone.